What's up, guys? Welcome back to RT2CC Comic Club. Justin here, and this is a two-day recap for November 9th and 12th. So let's just jump right into it. We did a few trades, so I'll post them on the screen here. On the 9th, we sold one of our Tesla calls because we were in the money, and I wanted to take profits, and so that was like, one of the better trades that I made. Really good return there, 104%. Then I sold the trade desk that didn't plan out the way I thought it would. I don't think their earnings were that great, and their stock went down. So yeah, we have that, and then I bought 7 more Canopy Growth calls. I was still really bullish at the time. I'm not really buying too much lately with them, but I did. We'll see what happens in future videos. But anyways, bought some more TQQQ puts this time because I was expecting the stocks were going down. I was expecting the stocks to go down, so I was trying to profit on that. And you can see there I sold my calls for the TQQQ and took a loss on that as well. So that was not great. And these two videos, let me kind of warn you guys, these two videos or this next video, this one and like the next 3 videos are going to be pretty, actually there's going to be a lot of them, pretty harsh. I lose a lot of money. Again, I kept getting tricked into thinking we were in a bull, or not in a bull market, but we were getting back out of the correction with those gains that we had in recent videos that you've seen. And it just kind of caused me to hold on too long, and you're going to see what happens when you hold on too long. Okay, so please learn from my mistakes so you don't make them yourself. Now going to the stocks, see how the stocks did. On the 9th, it was red, just more red. A little glimmer with the little green with Tesla, but then it came back down. So overall, Tesla didn't do that bad that day. They only lost 89 cents a share. It wasn't horrible, but Netflix did very poorly. Amazon did pretty poorly. And yeah, so going into our winners, we literally had 4 winners, and so not a good day at all. Lost about $11,000, and let's just go to our losers because there was quite a bit of them. These are our bottom 12. So Amazon, Canopy Growth, took big hits with those. Yeah, lots of big hits on all of these. So let's just go straight into the next day and see how the stocks are doing. More red. There was some green with Tilray and Canopy Growth. But the Dow did absolutely horrible. 602 point drop. NASDAQ 206. That was awful. I was surprised Tilray and Canopy Growth even finished in the green, but it could have just been more momentum from the midterm elections, even though they went down the day before. But who knows? So going to our winners, we had a few more than last time, but we still took a massive hit. You can see up there our balance dropped by $18,000. So it really sucked. I think I'm starting to think that some of this money, like the balance that shows my TD Ameritrade app, I just actually thought of this just now. It might include my margin as well. So when I have down days, it actually goes down more because my margin decreases the amount of money I can use. That's just a theory I just thought of, so I could be wrong, but I'm just thinking out loud here. So if any of you guys know if that's the case, comment below and I'll definitely pin it to help everybody learn that. But going to our losers, look at that. We had 6 of our positions lost over $1,000. So this was a very, very bad day. One of our worst days of the year. And yeah, so that, not great. And I'm going to talk about an article that talks about, and this is interesting because it kind of goes on both sides of the coin within this one article. So the article is Goldman's bear market risk indicator signals returns will be 0 in the next 12 months. So it's talking about this indicator that Goldman's has. They said basically when it goes above 60%, it's usually you should be looking to turn more cautious. And it's at 73% according at the time of this article, and that's very high. However, at the end of the article, he basically says it's more consistent with sharp correction rather than the start of a prolonged bear market. But the reason he said we might not be going into a bear market is because he said we continue to expect a sustained period of low returns rather than a sustained bear market, because in order for the stock strategist to ring the alarm about a recession and bear market, he said we need to see a sharp rise in inflation and interest rates. But because of the lethargic inflation, there has been a trend lower in volatility and longer expansion phases. I kind of agree with that sentiment. I think the interest rates aren't going up as high as alarm levels would indicate. The Fed, has raised them a lot in the past or recently, but I think they're more in the camp of we're going to wait and see what happens in 2019, which I think is calming down a lot of people. And also, at the end of this article, they said, without the recession, a bear market is not very likely. And with the likelihood of negative returns rises as growth slows, it doesn't become high until GDP growth is below 1%. And our GDP growth is pretty decent compared to that 1%. So, there's still some hope that we're not going to go in a recession bear market. And I'm trying to keep the faith here, but I still have my puts for protection. And I'm still kind of more focused on Tesla because I think they're going to have a good year, regardless of what happens. Speaking of Tesla, I do want to talk more about them. I know I say I don't want to talk about them every video, but again, they're my biggest position. At this point in time, Robin Denham was appointed to the Tesla as a new Tesla chairman, and a lot of people like her. Some people don't. They think she's like a yes woman, whatever. But I think that's normal for people to agree with the CEO. That's why they kind of work with the company. But anyways, let's just move past that. This is that Todd Gordon dude again, the analyst who was very wrong about Apple, and I forget what I mentioned in a prior video. He was really wrong about stuff, but he actually likes Tesla, and he was pointing out that they had these similar declines, pullbacks, like 34, 37, 36%, and he's expecting them to come back up, and they could even hit that 420 level that Elon Musk tweeted about. Whatever, I'm taking that with a grain of salt because Tesla stock kind of does what it wants to do. I don't think there's really much patterns with it. I could be wrong though, but still, I'm not really focused on that. What I want to focus on is this chart, and I want to show you guys. I don't know if you've seen it before, but it's a very, very awesome chart. It shows the cumulative sales for the top 10 US plug-in cars, and if you look at that one really steep-looking one, that's the Tesla Model 3, and look how quickly it grows, and that is just an amazing, amazing chart because all of the other ones have a more linear growth. Like, it's still growing, which is awesome. But the speed at which Tesla Model 3 is growing is just nuts. And I think that can continue. And here's why I think that can continue. If you look at this next graph here, it's a map of the United States. I got this from the Now You Know video, but I forget where they got it from. Oh, it looks like there's a link there. You can look at it. But anyways, all the orange and red states are states that Tesla cannot sell directly to customers or even service vehicles. And that's like more, it looks like it's more than half the country, about half. And so Tesla still has a lot of room to grow just in the United States, let alone the rest of the world. So yeah, and so I think Tesla has a lot of room to grow still. Again, if they can get more United States to sign on with them and let them sell directly to customers, that's just going to increase sales a lot. And of course, they're already delivering cars to Europe and China already. And it's just, I think they have so much more room to grow. And yeah, I am not at all worried about Tesla because of this. I just think there's so much more market to grab. Like if you just look at how many people have electric cars, it's only like 3 or 4%. I could be wrong, but it's like in the single digits right now. And so there's still a lot of room. And I think Tesla, we're going to look back at Tesla when it was in the 300s, and we're going to say, remember when Tesla was in the 300s, how cheap it was? And it's going to be 400 or 500 within the next couple of years. That's my non-financial advisor opinion, but that's my opinion. So anyways, we're going to leave it at that. If you like this video, hit that like button and subscribe if you haven't already. And I hope you guys have a great weekend, and we will see you tomorrow with another video. So stay tuned. Hey guys, thanks again for checking out this video. If you want another way to support the channel, please check out that Patreon link up there at the top. You get access to my private Discord server where we chat about different companies we're looking at investing in. I also post my current trades in real time as well as news headlines with little mini summaries. And you can also get discounts on any merchandise that we sell, like a shirt like this, for example. And if you want to just subscribe to the channel, I would appreciate that as well. You can just click that black logo there at the bottom. Thanks again for watching, and we'll see you in the next one.